For more on the trade deficit and intellectual property rights, the issue, well, we're joined again by current affairs commentator Einar Tangen. Now, Einar, as we've been on air, China's representative to the World Trade Organization has made a formal statement about the latest tariffs. Ambassador Zhang Shenchen said, quote, "The findings of the U.S. Section 301 investigation are a willful distortion of facts and full of selective assertions and allegations, turning a blind eye to the actual progress that China has achieved in the market-oriented reforms, further opening up and enhanced IP protection." What do you think of this statement, Einar, and how do you think it will be received?
Well, this is the unfortunate reality. You would think that because of China's rapid progress, that there'd be more understanding of China. Actually, quite the opposite. Within the international news, you continue to see this kind of harping that somehow China has played unfairly consistently, and that somehow the government is behind all of this. If everything the press internationally said was true, China would be nowhere. I mean, it's just impossible for it to have gained what it did. Now, China has already filed a formal complaint, not a complaint, a notice with the WTO of its retaliation with the $3 billion. I think you're going to see more strong action from Beijing as they seek to answer this kind of Donald Trump playground bully tactics.
Now, much of the Trump administration's trade deficit concerns focus on goods. But how will this latest trade move with tariffs on goods impact its booming service trade with China?
Well, it could be quite sharp. If China decides that they're going to reverse and they're going to start closing down industries, that $47 billion in trade surplus that the U.S. enjoys, and that's the surplus, it could dramatically go down. You would see a huge hit to a lot of the financial and accounting service firms that are out there. As I said, this is no good for anybody. It is a wild miscalculation by Donald Trump, thinking that he can use this as a bargaining chip as he tries to get what he wants, which is unilateral control of all economic relationships in the world. If countries out there think for 1 second that this will end with China, they are sadly mistaken. He will use the same tactics on everybody thereafter.
Now, there's so much focus on goods, but how important is it that services and these intermediate goods are properly reflected and included in the overall China-US trade deficit picture?
Well, I mean, this is the problem. I mean, there's a selective creation of facts which are presented. I mean, Donald Trump in his speech, which we heard earlier, said a $500 million trade deficit. I mean, this is the kind of wild exaggeration that he wants to use to obscure the fact that he's trying to change the conversation in Washington and get what he wants through these short-term trade negotiations. He's basically decided he's going to pitch MAGNA, Make America Great Again, against China 2025 as some sort of ideological battle between who will be supreme in the world. China's position has always been win-win. How can we grow together? But this is not acceptable to Donald Trump.
And you would think this would be an area of cooperation. I mean, the US and China do have different comparative advantages. The US is very good at high tech and services, and you have China, who is excellent also at manufacturing. But then you have the US, which has strict control over high-tech exports to China. And then a lot of people are wondering, why isn't the US then taking full advantage of its exporting to China instead of blaming it for the deficit?
Well, this is the issue. America is in a defensive mood since 2008 and 9 and the economic meltdown. A lot of workers, a lot of the people who support Donald Trump feel they have been marginalized, and he's channeled a lot of that aggression towards China, claiming that China should be identified as the scapegoat for everything that has gone wrong in the United States, when in actuality, it's the larger financial institutions in the U.S. and the fact that we are undergoing a profound change in terms of technology. It's technology that has reduced jobs in the United States and throughout the world, and it will continue to do so. It has nothing to do with China or any other country. It's simply the facts of competing. China believed in 2001, the U.S. mantra that if you join the WTO and you compete, there will be a future ahead of you. Now that door is trying to be closed by Donald Trump.
All right, thank you as always for your insights. Current affairs commentator Einar Tangen.